Hello, this is Matthew Chan and
Martha Leverett,
and we're here to do another video for you. And in this particular video, we're going to talk about the issues of after-the-fact accounting and shoebox accounting. So I know this is your favorite subject, and you know what? It's probably one of the biggest reasons why people contact you, because you've got so many business owners like me who start a business, they get going, they're so focused about making money and paying the bills, everything else is puts away side. What do you think about that?
I think if you're not going to do the bookkeeping yourself, I say give yourself a couple of months, but then you need to get a bookkeeper to do it for you. Because if you will remember, it's a whole lot easier to determine what something is if it's within the current year than, say, 4 years before, right, and you're trying to decide exactly what was that I did. Now, if you're somebody who keeps every receipt and writes on the receipt, you know exactly what it is, that's good.
And I'm sure everybody does that, right?
No, no. Mm-mm. But when you bring me a shoebox or a utility box and say, this is the year's work, I paid the bills, I received the money, but it's not in the computer or anywhere except here and on the bank statements.
And the phrase shoebox accounting, I'm not sure where that came from. I mean, you heard of it before too, right? I mean,
well, that's because I've had a couple of clients bring it to me in shoeboxes.
But I think it's been, I think it's an informal term people have tossed around over the years. And what it is they just pile all the paperwork and they just stick it in a box. And the attitude is you'll sort it out one day.
Yes.
And which leads, shoebox accounting leads to what I thought was a very cool term that you came up with, after-the-fact accounting.
Yes, after the fact.
Sometimes it's way after the fact,
yeah,
years. And I can attest to what Martha is saying in terms of, I generally pride myself in having a pretty good memory, and I also pride myself in generally having a good, what I call paper trail. I know I've been guilty of not doing it, but I generally try to have an audit trail.
Yes.
But having said that, there has been so many times when you have come up to me and you says, okay, we got an audit trail, but but you still don't know what it is. I was like, oh my God, I still don't know what it is. It's terrible because the years going by and it's so hard to reconstruct it. Now, it's not so bad if there's small transactions, right?
Right.
You can just kind of throw it into some category.
But
the big ones, oh my God, that's so hated. I hate the big ones.
Yes.
Because it skews the numbers if you stick it in the wrong place. And it just kind of bugs you. It's like, what did you spend it on? Or sometimes the other way is, where did this money come from?
Yeah. And if you have different, like with your real estate, if you have different homes that the rent is the same, then, you sit down with a process of elimination. Okay, I can account for all of these that are this amount, and I got these, so you got to try to figure out where it goes. Right. So, I mean, if it's a month after the fact or, quarterly after the fact, that's not as bad, but it's really not good to wait years to go back and catch up. It does kind of make it difficult for you. I have clients that they pay their own bills, they make their own deposits, and at the first of the next month they give me the bank statement, the checks, the receipts from the deposits, and I put it all on the computer and print them out reports, and it just makes it so much easier. Then at the end of the year, they've got all their stuff right together, ready for the tax man. And one thing is, we don't charge like the tax man charges. If you wait and take all this to the tax man,
oh my God, yes,
they're going to be charging you $100 an hour, or
a CPA firm,
or a CPA firm,
yeah,
which they're basically going to have somebody do the same thing that we would do. They're just going to charge you a lot more because you're going through the CPA firm. Now, I don't do taxes, but I get everything ready to hand to the CPA, who then does the taxes, and that's all you're paying him for, is just the taxes, not all the actual bookkeeping during the year.
Right. Now, just so that our audience members are a little clear on the after-the-fact accounting, is one of your strategies before you even get to the bookkeeping is just to organize it.
Yes.
To sort things out.
Sort it all out and organize what it is.
Right. Like get the receipts on the receipts. Get the, you know, whatever monies you've taken in one pile.
Right.
Breaking up by vendors. I mean, you know, and do you find that a lot of people are good at organizing, or you have to even get involved with that?
Well, some of them are good, but mostly I end up having to, you know, sit down with some file folders and do utilities and, you know, all the different categories, you know, that they might have and get it all broke down. Then go back and try to put it all in the computer. It makes it easier when I'm looking for something to not just have to go through this massive papers, but to be able to pull the utility folder and see, you know, which it was, whether it was gas or, you know, electric or water. Because some people will put the amount on a check stub and won't even put who they wrote it to.
Yeah, that's a real problem.
And years ago, when the banks sent you your checks back, that wasn't that big of a problem.
That's correct.
But now, you know, they don't. They send you this photocopy.
If you're lucky.
That you need a magnifying glass to be able to, you know, to read and figure out. So.
Well, it's even become a big problem. You know, in the you talk about the check copies. That's when you're fortunate. But lots of times, if you do an electronic transaction, it's dead. I mean, there's nothing. It's just an entry. You know, and you may have a vendor name. You know, and that's
or it could be a series of numbers and not even a vendor name.
Right.
And then you're hunting through the receipts for the amount that was, you know, debited out of the account to figure out what it was.
I'm going to tell you, I would venture to say that some entrepreneurs are so worried about just getting money in the bank, they don't make a photocopy.
I know.
There's no receipt. I mean, because they don't think about it.
Yes.
They're worried about the day-to-day, and then next thing you know...
Getting the money in there, getting the bills paid, and not worried.
Right.
At the moment.
At the moment.
About, you know...
And there's heck to pay later.
Right.
Oh, my gosh.
Yeah.
And like I said, I know this because, you know, I've been in it. And this is with me planning for the fact that I did want to audit trails. I made photocopies. But you still lose track.
There were
it's
still,
crazy.
there were still some that we had to hunt for.
And, like, I like to use credit cards because cash has a way of, like, disappearing. But credit cards, you may not know it, but at least there's a little entry that gives you kind of a clue where that money went to. So
that's
anyway,
true.
So is there any other things that you feel that you would like to talk about regarding after the fact accounting or shoebox accounting?
Well, after the fact bookkeeping is okay. There's no problem with it. But like I said, in my opinion, you should keep it current. If you're a very small business, I still would say do it quarterly. If you have more than 30 transactions a month, I would say do it monthly. Just makes it easier.
Well, I'd like to point out, since you brought it up, it's also less expensive. In other words, the rates are higher when you have to recreate history than if you're just going and picking up and reasonably current and going and in a steady schedule. So what we're looking for is we're looking for clients. There's no problem if you're behind, but the objective is to have a steady ongoing relationship. It's good for you as a client because you're current, but more importantly, you're paying less for an accounting cost versus letting things stack up where it becomes so much more work intensive and we have to charge higher rates. Would you agree with that, Martha?
Yes, very much so. Because what I do, I have a client right now that I'm doing catch up on a couple of years back, and if I can't readily figure out what it is, I just stick it in a miscellaneous account. Then I'm going to have to go print it out and sit down with him, and he's going to have to try to figure out and tell me what all these things are.
Right, and the thing about it is, you can get stopped up with a handful of transactions, and you're paying that hourly fee.
Yes.
So, I mean, we're not trying to run the clock up, but the fact of the matter is, sometimes it just takes a few transactions to eat up an hour or two.
Yes, trying to figure out what they are.
Right.
So
thank you for taking the time to watch this video, and come see us on our next video. Thank you.
Thank you.